Hello, very good morning to all, and welcome back to today's Daily Dose after Labor Day break. I hope that you guys have a restful one-day break, despite the high volatility that we see in the markets in the last 2 days. All right, so before we start today's gist of today's Daily Dose, very good morning to all. Today will be Friday, the 2nd of May 2025. So as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so just to make sure that everything, the sound check and as well as the screen is fine, just give me a couple of seconds, guys. All right, I think it should be fine. All right, so as usual, before we jump straight into the intraday technical outlook on those broad-based cross-asset classes, let's have a recap what has taken shape yesterday in terms of news flow, data release, and as well as the impact on the broad-based intraday cross-asset movement in terms of like the major FX pair, the major stock indices, and as well as the two key commodities, gold XAU slash USD and commodities. So let's start from the Asia session first. So over the Asia session yesterday, the biggest movement was in the FX market. So I could see the FX market yesterday, the dollar yen strengthened. That means the dollar strengthened against the yen in terms of the movement of the dollar yen was rather steep yesterday. You could see over here. So this is the 5-day rolling performance basis of the US dollar against other major currency. So we could see it's a very sharp movement in the dollar yen yesterday. So the dollar yen yesterday, if you look at the daily chart of the dollar yen very quickly, so the daily chart of the dollar yen yesterday rallied by 1.6%, and it almost hit our medium-term pivotal resistance level of 14550 and slightly below the 20-day moving average as well. And in today's Asia session, it started to show this kind of doji candlestick pattern, only almost unchanged at 14550 over here, and also it actually rested right exactly by forming this hesitant daily intraday Japanese candlestick because it's still impending. The day hasn't closes yet until the end of US session today, which is a doji candlestick pattern representing that the bulls are rather hesitant today as price action retest this former major ascending wedge trend line from the low of 16th of Jan 2023 low, where you could see over here, all the way down to 16th of Jan 2023 low, now turns into a pullback resistance at around the 145. The high was around the 146 figure level or 145.90 figure level. So later I'll touch more about the interesting technical analysis movement on the dollar yen when I cover the intraday technical analysis outlook for the dollar yen and the FX and the other major FX pair. So I want to stress that only the dollar yen, the dollar was strengthening against the yen, but not so much against the other major currency, where we start to see the Aussie dollar, the Sing dollar, and the CNH the dollar continues to remain lackluster against the Aussie, the Sing, and the CNH, and as well as trading almost sideways against the sterling, the Swiss franc, and the Kiwi. Even the dollar also starts to weaken against the euro as well as we are speaking right now. All right, so it's more like a outlier movement on the dollar strength. Seems to be an outlier movement yesterday, primarily driven by the yen weakness. So why the yen was so weak yesterday was due to BOJ dovish hold guidance. So yesterday we do have BOJ interest rate decision. So the interest rate decision was almost within market expectation. So BOJ kept interest rate steady at 0.5% over here. Oops, what happened? Look at this advertisement. All right, so let me make it larger. Okay, let me remove all those advertisements. Okay, 0.5% widely expected, but what disappoint market in terms of for the yen boost was actually it cuts its growth forecast much more drastic. So yesterday we have the release of BOJ growth outlook forecast as well. That means they will release it in every 3 months. So the last one they released was in January. So after 3 months will be in May, the May meeting. So the latest quarterly outlook forecast, the BOJ board cut growth forecast in the quarterly report. So by cutting growth forecast, the growth forecast was cut quite drastically by half, by 50% over here. So what do I mean by that? Let me share with you. Okay, that was, yes, this one. In a quarterly outlook report released after the meeting, BOJ cuts its economic growth forecast for the fiscal year ending March 2026. I mean, this is the latest fiscal year. So we know that Japan do not operate on a normal calendar basis. They start every fiscal year from 1st of April this year. That means 1st of April 2025 to March 2026. All right. So earlier in January, they projected 1.5% and they reduced it to almost 50% to 0.5%. That also, it also slashed its growth forecast for the next fiscal year starting in April 2026 to 0.6% from an earlier higher expectation of 1% that was previously forecasted. So this lackluster growth trajectory or projected economic growth by this BOJ latest outlook report, stating that this is the recent development surrounding tariffs that will weigh on Japanese economy over here. That means that means what BOJ is implying to the market, they are actually adopting a flexibility approach, that looking at the possibility of potential aggressive US trade tariffs, not only towards Japan, but towards the rest of the world, that could impact global growth, in turn creating negative repercussion towards the Japanese economy. And because of this flexibility, that could allow BOJ to actually potentially delay its interest rate hike cycle, because still recall that since late last year, BOJ has really signaled to the market that it's continuously progressing to its normalization interest rate policy by gradually bringing interest rate higher after decades plus of negative interest rates. All right, but they could take it up in a very slow basis. All right, so far the interest rate only increased to 0.5% basis point, and market participants now looking for BOJ to have no hike in the first half of this year, including the next meeting, and potentially there could be only one interest rate hike before 2025. That means either come in Q3 or Q4 next year, depending on the US tariffs situation. So that causes the dollar yen to spike up yesterday. All right, and because of this spiking up of the dollar yen, that means i.e. the strength of this so-called yen, the strength of the yen weakened. That means yen itself is also being used as a safe demand hedges in the last 2 weeks because of this uncertainty surrounding the US trade tariffs implementation. Because of this yen strength bearish reversal that was seen yesterday against the dollar, that means dollar picking up yesterday, that causes gold price to slide as well. So if you look at the movement of the gold price yesterday in terms of the XAU/USD, it actually fall by 1.5% over here, and upon falling 1.5%, where it hit the 20-day moving average, and right now is attempting to shape a minor recovery in today's Asia session at 0.34%. So later I'll touch on the intraday technical outlook on the XAU/USD right thereafter. Right, because there's this potential bounce taking shape right now after the retest at the 20-day moving average on gold XAU/USD. This is the daily time frame chart over here, and what we could see over here is that during the close of the US session, now let me touch on the major US stock indices. So during the close of the US session, the market actually trended downwards over here. So there was actually first last hour sell off, but all the major US stock indices ended in the green yesterday. The S&P ended 0.6%, the Nasdaq ended 1.1%, the Dow Jones Industrial Average kind of lackluster 0.2%, but still positive. The Russell 2000 up 0.6%. Then what's interesting over here is that during the start of the Asia session, that means i.e. at 6 a.m. Singapore time, the E-mini futures, both on the S&P 500 E-mini futures and the Nasdaq 100 E-mini futures, actually recorded negative losses between 0.2% to negative 0.3%. The reason why, because of Apple lackluster guidance over here. Yes, Apple is the biggest heavy weightage stock in the S&P 500 and the Nasdaq 100, and what you could see over here is that the quarterly earnings beat expectation, but however, the slowdown in China causes its shares to decline as much as 4.2% in the after hours. All right, over here, very similar for Amazon as well. So Amazon also gave a rather lackluster forecast for the current period. So the company operating profit forecast for this current period, that means in the current period of Q2, is weaker than expected, citing factors such as tariffs, currency fluctuation, and recessionary fears. So that also causes Amazon to actually decline by 3%. All right, by 3% in the after hours trading. But however, market after that so-called intraday loss at the opening hour by the Nasdaq 100 E-mini futures and the S&P 500 100 E-mini futures, all these initial Asia session opening losses today caused by this lackluster guidance from Amazon and Apple has been totally neglected and erase all their intraday losses by flipping into a positive gain right now as we are speaking. So the E-mini futures and the Nasdaq 100 is actually up by 0.7% and up by 0.4%. So the reason why is because of the optimism triggered by US-China de-escalation. All right. So in 2 hours ago, as China actually officially said that it's now evaluating US talks after weeks of stalemate over here. So the China Commerce Ministry released in an official statement said that it had noted senior US officials repeatedly expressing their willingness to talk to Beijing about tariffs, and with that over here, it seems to me that there's a possibility that it could start the first round of trade negotiation talk with between US and China due to this official statement that's been released by the Chinese Commerce Ministry. So that causes another round of risk on behavior in the major US stock indices, and also that also causes a positive feedback loop into the Nikkei 225, which is up by 0.7%, and as well as the Hang Seng indices. The Hang Seng is up by 1%, and the higher beta Hang Seng Tech is up by 2.6%. So later I'll touch on more on the intraday technical outlook on the major stock indices when I cover that particular segment. And going forward, some economic data to take note of over here, because a tier 1 economic data that was released yesterday during the US session is the ISM manufacturing PMI data. So the ISM manufacturing PMI data, what I could see over here is still in a contractionary mode. So anything that's below 50 is contraction. So manufacturing activities for the month of April still continues to be a contractionary mode for 48.7, but came in slightly better than market expectation of 48. So it's still below almost unchanged from last month figure of 49. So if you look at the trend of the ISM manufacturing PMI in US, representing a tier 1 data for the manufacturing activities, growth, I would say that is still rather lackluster. Okay, give me a minute. Let it cool. All right, so it still continues to actually in a declining mode. All right, so if you look at the 10-year, okay, it's still in a declining mode since January 2025. All right, over here, so indicating that from a medium-term perspective, there is still softness in the manufacturing sector in the US over here. All right, that means indicating that from a medium-term perspective, there could be still risk of economic slowdown in the US economy. All right, so with that, that covers the first portion of today's daily dose. So let me now touch on the second portion, which will be, let me see, I think my screen is not sharing with you guys, right? Seems to me that my screen has frozen. All right. Yeah, just now I know why the screen is frozen. Okay, so this is the trend of the US ISM manufacturing PMI. So even though yesterday's PMI came in at 48.7, that is slightly better than what market is expecting at 48, but it continues its mode of decline since the start of this year. All right, so what we could see, what it means that from a medium-term perspective, manufacturing activities in US continues to be lackluster, which potentially could have a negative repercussion in the wider state of the affairs in terms of economic growth trajectory in the US. That means the US may still face a risk of a so-called potential recession in 2025. All right. So with that, that covers the first segment of today's daily dose. Let me move on. The second segment of today's daily dose will be the intraday technical outlook on those broad-based cross asset classes, starting with the FX market. So with that, let me expand my screen so that you guys could have a better view of the charts over here. All right, so let me start with the euro dollar. All right, so the euro dollar, before we went for our Labor Day break, because of mixed element, we turned neutral, and it broke below our neutrality limit at around the 133.40 level, 113.40 level, and hit our second support level below the neutrality range at the 1.1270, 1.1230, which is also the rising 20-day moving average. And how does it hit? After hitting that 20-day moving average or retest on it, we start to see positive element on the RSI, which is the hourly RSI, showing us a bullish divergence. All right, so what it means that yesterday's short-term down, yesterday's uh, intraday downside momentum has starts to ease off. All right, that means potentials signaling a potential intraday recovery for today on the euro dollar. So with that, I'll be using a 1.27 1.127 1.1230 as my short-term pivotal support level. If you look at how the price action starts to evolve in the last two sessions, it actually starts to evolve in a bullish descending wedge configuration as well by looking at the lines that I draw, the upper boundary line and the lower boundary line. So the lower boundary line is sloping, the slope is lesser on the downside compared to the slope on the upside over here. That is indicating that downside momentum has started to ease off as well by the price action that is forming on this bearish descending wedge configuration. So net overall, what we could see over here is that some signs of intraday improvement has starts to taken shape in the short-term technical analysis picture on the euro dollar. So with that, with these two positive price action development, we will flip to a intraday bullish bias on the euro dollar using 1.1270 slash 1.1230 as my short-term pivotal support level. Potential upside trigger level to increase the odds of today's bullish biasness will be the upper limit of this bullish minor descending wedge configuration. That means, i.e., the minor descending wedge, minor resistance level at 1.1340. All right, let me put it in writing so that you guys could see 1.1340. All right, so a breakout above 1.1340 exposes the next intermediate resistance level on the intraday basis for today, 1.1425, followed by 1.1480 next. Only an hourly close and a breakdown below 1.1230 will invalidate today bullish bias to flip the recovery into the continuation of this extension of this ongoing minor corrective decline sequence, exposing the next support level at 1.1220 slash 1.11050, which is also the former uh, long-term circular descending channel resistance from January 2028 now turns into a pullback support after that earlier bullish breakout that was seen on 10th of April. So that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar also floated downwards and hit the second support level at 132.50 slash 132.05 over here. And what we could see is that the hourly RSI also traced out a bullish divergence yesterday, indicating that yesterday's intraday bearish divergence, yesterday's intraday bearish momentum also has started to ease off as well. So with that, I'll be using 132.50 slash 32.05 as my short-term pivotal support level for today, which also correspond to very closely to this rising 20-day moving average as well. But however, I will have a first resistance level, which is the upside trigger level that the sterling dollar got to surpass, will be at 133.60 level, which is the minor descending trend line that is still in place from this Tuesday minor swing high, all right, which is now at 133.60. Only an hourly breakout above 1.3360 will increase the probability of a intraday bullish bias recovery scenario for today, exposing the next near-term resistance level at 134.80 on the intraday basis. All right, so which is so close to the upper limit of this ongoing medium-term ascending channel that I drew from the low of 13th of January this year. So net overall, we'll be using 132.25 slash 132.05 as my short-term pivotal support level for today for a potential intraday bullish bias slash recovery scenario, provided that we could have an hourly breakout to increase the odds of this bullish bias and recovery scenario, breaking above the 133.60 level, which confluence with the minor descending trend line that is still in place since the minor swing high of 29th of April, which is this Tuesday. A breakout above it, a breakout above 133.60 exposes 134.80 intermediate resistance next. However, a price action starts to have a breakdown and the hourly close below 132.05. Today's intraday recovery scenario will be flipped back to this extension of this ongoing minor corrective decline sequence, exposing the next near-term support level at 131.20. A breakdown below 131.20 may see 122.90, 1.2990 next, which is corresponding to the rising 50-day moving average, acting as a similar graphical support level as similar level as the 1.2990. Right, so that's for the sterling dollar. Next up will be the Asia Pacific currency, starting with the Aussie dollar. So the Aussie dollar continues to trade sideways, as right now, yesterday it attempted to push down and almost hit our first support level at 63.40/35 before bouncing up in today's Asia session, and right now it's retesting the former major ascending trend line from 13th of October 2022 low, now turns into a significant pullback support, where if you look at the last few days, since 21st of April, price action has been hesitating at this level over here, and also right below the 200-day moving average, which is our pivotal resistance when we went for our Labor Day break, which is at 64.70. So still no change, still using 64.70, watching it as a short-term pivotal resistance level. Potentially the Aussie dollar may seek another retest at the lower limit of this minor range configuration at 63.40/63.35, where the RSI now is also coming back to a parallel resistance level at the 64 level, where every time it hit this level at 64 level since 22nd of April, the price action starts to shape a push down within this minor range configuration that is still in place since 23rd of April this year. Okay, so still maintaining that intraday bearish bias within this minor sideways range configuration, using 64.70 as my short-term pivotal resistance for today. Only a breakout above 64.70 will invalidate today's intraday bearish bias to see a squeeze up to expose the next intermediate resistance at 64.20/65.50 next. So that's for the Aussie dollar. Next up will be the dollar yen. So let's say the dollar yen now is actually retesting a major ascending wedge support formally, now turns into a pullback resistance, and also from a lower time frame, it actually hit the upper limit of this potential bullish flag formation as well from the low of 22nd of April, and also a one-time Fibo extension at 46.10. And what's interesting over here is that given that it's coming very close to key resistance zone or levels, the hourly RSI starts to flash out a bearish divergence. okay, at the start of today's at the end of yesterday's US session, and in today's Asia session, it just started to exit from the overbought level after flashing that bearish divergence at the close of yesterday's US session. So with that, there could be some signs of at least a pullback that may take shape in today's session, starting from the European, stretching to the US session. So we will use 14610 as my short-term pivotal resistance level for today. I have a potential bearish bias scenario for a potential pullback to take shape at least on the intraday basis in the first step, with the next with three support level to watch out for today. 144.75 on the intraday basis. A breakdown below it may expose 144 figure level, which also correspond to the 20-day moving average. However, failure to hold at 144 level will expose today's critical intraday support level at 143.25, which also correspond to the lower limit of this potential bearish flag formation. All right. However, if price action have an hourly close above 14610 level, which is our short-term pivotal resistance for today, then we will see the continuation of this corrective rebound sequence to extend on the upside, exposing the next near-term resistance level at 14705, which correspond to the 50-day moving average as well. Right. So right now, in a nutshell, due to the price action of dollar yen testing at critical resistance level as being expressed by different angle, like I shared with you earlier, so I'll be using 14610 as my short-term pivotal resistance level. Do have a potential bearish bias for today, at least for a minor pullback sequence that could take shape, supported by a bearish divergence that has been seen on the hourly RSI during the close of yesterday US session on the hourly basis, and right now it has just exited from the overbought region as well, so indicating some form of intraday downside momentum that has started to take hold in the dollar yen. Right, so that's for the dollar yen. Now, up next will be the major stock indices, starting with the Hong Kong 33. So still recall the Hong Kong 33 before we went for our Labor Day break, we do have a bullish bias. So the bullish bias on the Hong Kong 33 right now has really hit the first resistance level at 22,500 and also broken above this minor descending trend line that I drew from the high of 23rd of April. Now turns into a key short-term pullback support at the 22,000 mark. Right, let me put it in writing. Let me adjust it in proper writing. 22,000 mark over here. All right, so with that, we will still maintain our intraday bullish bias because the RSI, yes, is in overbought level, but there's no bearish divergence. So potentially there could be a bit of minor pullback taking shape during the second half of today's Asia session. As long as this minor pullback didn't surpass below our Titan short-term pivotal support level for today at 22,000 on the Hong Kong 33, representing the Hang Seng Index, we will still maintain our intraday bullish bias on the Hong Kong 33. So above 22,500 may expose the next near-term resistance zone at 22,790 slash 22,990, which correspond to the 50-day moving average as well. But however, if price action starts to shape a breakdown in the hourly close below 22,100 level, today's intraday bullish bias will be negated to see a minor pullback to retest the 20-day moving average at 21,605. Only a breakdown below 21,605 will put this minor uptrend phase in first step in jeopardy to see a corrective decline sequence unfolding at 21,180, exposing 21,180 and even 20,840 next. So i.e. in a nutshell, still maintaining that intraday bullish bias on the Hong Kong 33 using 22,000 as my Titan short-term pivotal support for today. Next up will be the Japan 225 over here. So the Japan 225 representing the Nikkei 225, we do see the price action move up as expected. So almost hit our resistance level at 37,380. And what you see over here is that the hourly RSI has starts to shape a bearish divergence and continues to trend lower as we are speaking right now. So indicating that the upside momentum in the last two sessions has starts to turn lackluster, and we may see some form of a minor decline or pullback taking shape on the Japan 225 in the later part of today's Asia session, stretching into the European session and even in the US session thereafter. So with that, first near-term support level to watch. So we will flip to an intraday bearish bias for this potential scenario, potential negative scenario to take place on the intraday basis using 37,380 as my short-term pivotal resistance level. First support level to watch will be 36,200, which is the 50-day moving average, acting as a similar support level as well, and as well as this minor ascending trend line that is also acting as a similar support at 36,200, which is from the low of 7th of April. A breakdown below 36,200 may see a deeper minor pullback taking shape today for the Japan 225, exposing the next near-term support level at 35,470, which is the former congestion area of 23rd of April and 25th of April, got survived on the 1st of May. Only an hourly close and a breakout above 37,380 will invalidate today's intraday bearish bias of that potential minor pullback scenario unfolding to see a squeeze up to retest a key resistance level, which is at a key medium-term pivotal resistance level, which is at 38,135, which correspond to the 200-day moving average. I think it's a similar resistance level as well, and as well as this medium-term descending trend line that I drew from the high of 31st of January. So that's for the Japan 225. Moving on will be the Germany 30 that will be representing the German DAX over here. So the German 30 squeezed up above our upper neutrality limit on yesterday, where we went for Labor Day break, which is at this 22,480 and continue to pierce higher. No signs of a bullish exhaustion as being seen on the hourly RSI, as price action also break up above this parallel ascending former former descending resistance as well over here, and hasn't hit the overbought level yet. So with that, we will flip to a intraday bullish bias on the Germany 30. First support level to watch was this breakout over here that took shape yesterday at 22,600. That's our first support, but I'll be using this inverted V-shaped recovery on the Germany 30, which was the low of Wednesday during the US session, during the start of the US session, which is of 30th of April, 22,240. So as long as any minor pullback didn't break below 22,240, we also correspond to the congestion area here of previously on last Friday. We will flip to a intraday bullish bias for the Germany 30 above 22,920, exposes 23,230 and even 23,480 next, which is the current all-time high area. However, a price action breakdown and hourly close below 22,240 may start to see another round of choppy minor corrective decline sequence unfolding, exposing 21,830, potentially followed by 21,540 as well, which is corresponding to the lower, the 20-day moving average acting as a similar support level. Next up will be the major US stock indices, starting with the US Wall Street 30. So before we go for our Labor Day break, we also have a bullish bias on the US Wall Street 30 as this minor corrective rebound sequence starting from the low of 8th of April continues to play out its second leg. So the start of the second leg will be at the 22nd of April. So with that, there's we call it a V-shaped recovery during today's Asia session, triggered by that optimism of that US-China de-escalation team play. First support level to watch will be today's Asia session minus swing low at 40,690. But I'll not put it so tight because of today's there's another risk event coming into play. So I'll share with you what is the risk event when I cover the last segment of today's daily dose. So 40,690 first support level. Pivotal support level will be tightened to 40,280, which is the minor swing high area, former minor swing high area of 23rd of April, and as well as the this steepened minor ascending trend line drawn from the low of 21st of April. I think as a similar support at 40,280. So using 40,280 as my short-term pivotal support level to still maintain this ongoing intraday bullish bias view on the US Wall Street 30 to potentially finish up its last leg of this ongoing second corrective decline sequence, second leg of the corrective rebound sequence, which if I do in Fibo extension, okay, that's also close to the one-time Fibo extension. So first resistance level to watch will be at 41,470/740. 41,470/740, which is the 50-day moving average, I think as a similar resistance as well. Above 41,740 may expose the medium-term pivotal resistance level at 42,080/400, which correspond to the 200-day moving average. So once it hit this level, I'll be on the lookout for potential signs of bearish reversal, since this is a medium-term pivotal resistance level and could be also the inflection point to end this ongoing two-leg of corrective rebound sequence on the US Wall Street 30. However, if price action suddenly just break down below 40,280 with hourly close below it, today's intraday bullish bias will be invalidated to start to see a bearish reversal, at least in the near term, exposing 39,720 next, which is the 20-day moving average, acting as a similar support level as well. Below it, may see the 39,190 next, which is the correspond to the minor ascending trend line that I drew from the low of 7th of April that kickstarted this ongoing two-leg of minor corrective rebound sequence. So that's for the US Wall Street 30. Next up will be the Nasdaq 100. So Nasdaq 100 also rallied as expected and almost hit our resistance level yesterday at around the 19,900 level. So what we could see over here is that the Nasdaq 100, if you take from the start of the second leg of the corrective rebound sequence, from the low of 22nd of April, price action now has started to transverse or transform into a minor bearish ascending wedge configuration, indicating the lack of upside momentum by looking at the slope of the ascending wedge. So the upper limit of the ascending wedge is actually have a flatter slope compared to the lower limit of the ascending wedge. We have a steeper slope, so indicating that the lack of upside momentum due to a less steeper slope on the upper limit. So this is what I call a bearish ascending wedge. All right. So what we could see over here is it's now fast approaching a key medium-term pivotal resistance level at 22,250/390, which also correspond to the 200-day moving average. So this pivotal resistance level is also my inflection level, where we may start to see the potential end of this two-leg of corrective rebound sequence that has taken shape from the low of 7th of April for the Nasdaq 100. So with that, since it has still a bit more room to go, hitting the 200-day moving average. So on the intraday basis, we will still be having a bullish bias on the intraday basis, but we're using a Titan key short-term pivotal support level for today at 19,415, which correspond to the lower limit of this bearish minor ascending wedge configuration towards the to see the medium-term pivotal resistance coming in at 20,250/390, which will correspond to 200-day moving average. So once it hit this level, today we'll be watching out for bearish reversal candlestick formation. However, if a sudden push down and the hourly close below 19,415, then today's intraday bullish bias will be invalidated to kickstart at least a minor bearish reversal scenario. Once it breaks down below 19,415, which indicate a bearish breakdown of this minor bearish ascending wedge configuration, it may expose the next near-term support level in first step at 18,960. Below it may expose 18,670 next, which correspond to the 20-day moving average, acting as a similar support, and as well as the minor ascending trend line that is supporting this ongoing two-leg of minor corrective rebound sequence from the low of 7th of April. For sure, a breakdown below 18,670, then that would indicate that this minor corrective rebound sequence, the two leg of it, first leg from 7th of April to 10th of April, second leg from 22nd of April all the way to the current price action yesterday, has totally been terminated by the breakdown of 18,670. All right, so that's covered the intraday technical outlook on those broad-based cross asset classes. Now let us turn our focus now to the commodities market, starting with gold XAU/USD. So let's look at spot gold XAU/USD. So for spot gold XAU/USD, what we could see over here is that yes, it has broken down below the pivotal support level in the last two sessions, and it now drift to the second alternative support level at 31,094, 3194, 3162. We saw that 20-day moving average, and now it's actually attempting to rebound from the 20-day moving average. And what you could see upon attempting to rebound from the 20-day moving average over here at your screen for gold XAU/USD, let me put it in writing over here. Let me remove this. All right, so that you guys can have a better view. Okay, let me expand my chart. Okay, so this is gold XAU/USD. The hourly RSI also traces out a bullish divergence, right? A bullish divergence over here, and right now it has starts to break. There's a attempt to have a kind of a bullish breakout from a descending trend line as well. So indicating that some form of intraday bullish momentum recovery is now taking shape on gold XAU/USD. Then with this potential, we call it impact ongoing minor bullish momentum recovery. I do not have any justification to have a bearish bias view on gold XAU/USD for today on at least on the intraday basis. So with that, I'll be using this level here, 31.94, 31.62 as my short-term pivotal support level for today. Okay, my short-term pivotal support level today for this gold XAU/USD, and the first resistance level to watch out for today will be at this level here. Okay, let me put it in writing. Okay, 1 second now. It's a bit sticky right now. Okay, so this will be the level. Yesterday's Wednesday's US session high that kickstart that 2 day of decline. And if you look at this level here, 3,315. Right, so 3,315 will be my first resistance level. Above 3,315 will potentially expose us 3,370 next. That's for gold XAU/USD. However, a sudden breakdown and hourly close below 31,062 that will invalidate today's intraday bullish recovery scenario to see the extension of this multi week corrective rebounds, multi-week corrective decline sequence unfolding to the downside, exposing more weakness on the gold XAU/USD, retesting the 50-day moving average. All right, over here, this is this close to this level, so it will be a zone. Okay, this congestion, this graphical congestion here, and of course correspond to the rising 50-day moving average as well. So that will be 3,086/3,055. Right, so that's for gold XAU/USD. So in a nutshell, because of that positive observation that's being seen on the hourly RSI, as per explained earlier, we will use 31.95/162 as my short-term pivotal support level for gold for a potential intraday bullish bias recovery signal that may unfold. First resistance to watch will be 3,315. Only above 3,315 may expose 3,370 next. All right. Lastly will be the West Texas crude oil. So the West Texas crude oil plummeted as expected and hit our support level, and it also retest the all important 9th of April medium-term swing low area, and it start to form a hourly bullish, not hourly, a daily bullish candlestick. All right. So this is the daily chart of West Texas crude oil. All right, daily chart. All right. So given with this daily bullish hammer candlestick that has been formed on the West Texas crude oil yesterday, we now has lower odds of a intraday bearish bias for West Texas crude oil. So for a intraday basis, we will now potentially start to see at least some form of corrective rebound sequence taking shape again, at least in the first step. So with that, I'll be using, all right, over here. Let me remove this. Let me remove this. Let me remove this. Okay, let me put it in writing. Okay, let me remove this. So 55.50 will be my, because since it already hit our support level, so plus the positive appearance of the daily bullish hammer candlestick right at the swing low area of 9th of April, we will now flip to a intraday bullish bias. All right. at least the short-term momentum, downside momentum may have already eased off by the appearance of yesterday's daily bullish hammer candlestick. So using 55.50 as my short-term pivotal support level. So the first resistance level to look out for today's intraday bullish buyers corrective rebound view will be at this 62.39 level, which correspond to the declining 20-day moving average as well, acting as a similar resistance level. Okay, let me remove. Okay, let me change this. Okay, hopefully I can get some form of, okay, it's still all right. Let me see this. Oops, I think I don't know why it's still hang. Okay, good. So this will be 62.90. All right. So above 62.90 may expose the minor swing high area of this Monday at 63.88. Next over here. However, with an hourly close and a breakdown below 55.50 over here, today's intraday bullish bias for that potential minor corrective rebound recovery scenario may get invalidated, and price action may see a retest at the next support level over here. There's this congestion area. $53.86. Okay, let me go put it in 1 hour chart. Okay, 53.86. Okay, so given the positive element that I share with you guys on the daily chart for West Texas crude oil, we will flip to a intraday bullish bias for today for West Texas crude oil using 55.50 for as our short-term pivotal support level for a potential minor corrective rebound sequence to retest the 20-day moving average, now acting as a similar resistance level at 62.35. Above 62.35 may expose 63.88 next. All right, so that's for the West Texas crude oil, and that also sum up today's intraday technical outlook on the major cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So I mentioned that today's will be a potential risk event to take note in terms of economic data release. A major one will be the Eurozone inflation preliminary data. They call it inflation rate flash. That means a preliminary one for the month of April. So the focus will be on the core inflation rate. Market is expecting a slight uptick to 2.5% from 2.4%. So that's Eurozone, and that may impact the euro dollar and as well as the Germany 30 rate. Then thereafter, after 3 hours later, 3.5 hours later, we'll focus our attention to the US side of the story, where 8:30 p.m. we have the non-farm payroll data, where market expecting a softer number of 130k jobs added from the previous month of 220k jobs added for the month of March. Almost stable for the unemployment rate to remain stable at 4.2% as from the previous month of March. So that will be 8:30 p.m. Singapore time, the release of the US non-farm payroll tier 1 job data and as well as unemployment rate. So that will potentially impact the dollar major pair and the movement of the dollar, the movement of the major US stock indices. All right. So thereafter will be a quiet US session, and then recall that on Saturday we do have the federal election in Australia that could have a potential spillover impact on the Monday Asia session on the Aussie dollar and the ASX 200. And we also do have the Singapore general election as well. So with that, let's sum up today's Daily Dose of Market Insights. I wish you all a happy Friday and a restful weekend, and we shall speak again on next Monday. Thank you.